getting bready, so they getting blah. Shorty on my dick, she tryna give me slob. You could catch me smoking on the latest, Matt was dry. Shorty pick it up, I'm throwing bands in the club.
We back with another video. You know how it goes. Keep the energy flowing. I asked chat what kind of video I should make, and everybody wanted a charting video, so let's get into a charting video. I asked ChatGPT for 5 random tickers to do chart analysis on. Make sure they have good volume, blah blah blah. It gave me Nvidia, Tesla, Apple, AMD, Amazon. So you know what? We'll start out Nvidia. Ouch. That's my first. We're on the daily. Ouch. So how I look at this on how I analyze stocks on a longer time frame is I use my SMA setup, which is I have the 22, 55, 100, and the 200. If you guys don't know the difference between an SMA and an EMA, kind of have right here. So there's 2 main ones. There's an EMA and then there's an SMA. And let's say, and there's numbers right behind it, and that's called a period length. So for like the 55 SMA, what it does is it looks at the last 55 candles and then takes the average of it. And so same thing with this one. It'll look at the last 22 candles. This one will look at the last 100, 200, yada yada. So the difference between EMA and SMA is that the EMA places, let me write this down, more weight on recent candles, and this one is equal weight across all candles. Now what does this mean, right? What this means is the SMA is more holistic and gives a more broader term, you could say, level or idea of how price is moving, and the EMA is more reactive to more recent price changes and could give you a little bit more speed or a better entry or quicker. It doesn't lag as much. I mean, both of them, moving averages, all moving averages at the end of the day are somewhat lagging indicators, but EMA is more reactive than SMA. But the SMA holds a lot more value on a longer term basis than an EMA. Okay, we got that out the door. What do I usually look for? Something like this. Like, this isn't, like, even though the drop off was terrible, it's a very good fact that we have recovered the 200. And what I am looking to see is that we hold the 200, and honestly, as soon as we test, let's drop a line here. This is where we're gonna face some issues, and it's what happens here, which is gonna determine what happens for honestly the next couple months, in my opinion. And we have earnings coming up, so who knows? But if I were to go long and like start really heavily sizing, I'd need to see this be cleared first. Besides that, the fact that we're now above the 55 SMA, it's just like a weak stock. Like, it's just a lot more risky to play. I'm not too interested. But, you know, the video is one of the biggest names in the market. It's like, how do you not play it? How do you not play Nvidia? No matter what condition it's in, you're gonna play that name. So that's why we're still playing it. Tesla. So I've already done a decent bit of charting here, but I guess I could just explain what I've done. And basically, so this is like a downwards trend channel after our expansion that we've had this year, and I'll have all my SMA levels so the key part I was looking for is if we hold the 55, I can remove the other ones. I needed to see the 55 be held and the slight upwards trend line be held, and we got close, but today was not a good day. And now this tells me, is this a level I have? No. Okay, that's price. Okay. We can look off options and options flow and Greeks and whatnot. But basically, what these lines are. Alright, I'm gonna need to cut this part out. Okay. Basically, what these lines are, these green lines, they're where dealers are positioned positively, like where they have positive gamma exposure. And I got this data from just looking at, let's see if I could pull this data up for you. And let's see if the data's changed. So I'll look at the gamma exposure, and I want to see how are people and the market makers positioned for like a month out, or let's say the end of this month. So looks like the picture has shifted a little bit. So we have support at 370, a lot of negative exposure all the way up to 390. So let's just move this, let's just update our chart a little bit. And it's not even, the thing is, I'm not even excited about it because it's not even that much exposure. We have so much negative exposure. Like if it falls, like we're falling and stopping at 350. I'm sorry, this was supposed to be a charting video, and I'm looking at gamma exposure right now, but not good. Okay, screw the gamma exposure. Let's forget, like, let's imagine we didn't even know what gamma exposure was or whatever. Just the fact that we're under the 55, your red flag should be going off. Like, okay, getting a little bearish, just a little bit. Stock has a good amount of room to fall down, and as we've seen, the next support level is 350 based off of Greeks, and just by looking at the chart, that's where we've seen resistance from our last push up, and that resistance should be flipped into support as we approach it again. So right now I'm kind of bearish Tesla. I have Tesla calls. I'm in 950 Tesla leaps. I might have to manage them. We'll see. This is not a move I wanted to see though. The last 3 days, no bueno. But honestly, with Trump tariffs, you can't really predict or expect like anything. You gotta be safe. Oh wait, where are the other? Okay, Apple. Let's look at Apple. Apple. Actually, it's not terrible. Do I like it a lot? Not really also. Once again, I won't look at any of the Greeks. We'll just try to analyze this purely based off the chart. We have resistance there prior. We're under the 55, we're under the 100, bearish. I'm looking for a test of the 200 again. And honestly, I think we could go lower. But this isn't something I would want to play right now. I would only maybe think of playing it above the 55. And right now, it's the type of market where you're better off being safe than sorry. You're better off FOMOing, missing one or two plays, and still having money held on. Like, at least you still have your money, rather than you trying to get in something and news comes out and you're fisted. Because I know a lot of people recently have gotten absolutely fisted. And I mean, everybody who owned NVIDIA got fisted. And I know I wasn't the only NVIDIA holder, so. But we knew tariff news. Trump kept saying tariffs coming out February 1st. Tariffs coming out February 1st. I guess the markets like didn't believe him, and then when he dropped them, we were like, oh shit, he's serious. But right now, Apple, do I like it? No, it could go higher. Like, technically, like, this could be a higher low forming. But I don't trust it. I don't trust it 100% yet. But honestly, I haven't shown you guys how I analyze on a short-term level. So let's just look at the price action from today, and we'll switch from my long-term setup to my day trading setup. And you're probably a little confused right now, like, whoa, that's a lot more lines, and what the hell's on the bottom? So this is RSI. I use this. This is the relative strength index. This is the MACD, convergence, divergence. I have the VWAP, EMAs, the 9 and 21. It's my secret sauce, and the 150 EMA. Right. You know what? Screw it. This will be a long video, but we'll just get it done. We'll get it over with right now. So this, I basically told you how I analyze long term. I just use the SMAs, and I like it if it's above the 50 or 55. But the real sauce comes in when you're placing those swing trades and those like short term trades, you know. So right off the bat, okay, do I really want to trade this off open? No. Okay, this is green. This is what I see just off looking at what I have right here. Green flag number 1. The 150 EMA is below VWAP. That's green flag number 1. Yo, future me edited in. Okay, green flag number 2. We are above VWAP. Ding. So what I usually look for, like, just very basically, on the very most basic level, if we got rid of everything else, I'm only taking calls usually. I say usually because there are exceptions. Usually I'm only taking calls when we are above VWAP, and I'm only taking puts when we are below VWAP. Why? My answer is relatively simple. If we're taking calls above VWAP and we fall down, we have VWAP as support to bounce off of, or at least to act as support and give us a little bit of time to get out if it flips a VWAP again, you know. But it just doesn't make sense to take calls under VWAP, because okay, let's try to see a stock that was under VWAP for most of the day. Like, would you want to take calls on any of this? No. Okay, now let's see. You might have been like, oh, Jazz, but we're above VWAP right now. Why wouldn't you take calls? Now let's see if we could get a better picture. This red flag, and I knew it. You know why? Okay. Basically, why I use the 150 EMA is for two things. It tells me what's kind of been happening to the stock on a bit of a more broader term, because right now when we're day trading, we're only looking at the price that's happened like during that day, or maybe like a little bit of overnight. But when you're using a long EMA, you have a lot more data built in. So what this is telling me is that we're in a downtrend because our VWAP is below our 150 EMA. Reason why I also wouldn't want to take calls off here is because the 150 EMA can act as resistance. And one thing I don't want to do is have resistance above me when I'm taking calls. Very simple. What I do like on like what was I looking at again? Apple, was it? What I do like is when the 150 EMA is below VWAP, because it's a secondary level of support below VWAP. Say like, okay, we're on the 5 minute, but let's just come down. Okay, it's different now. Apple, this is a great long right here. Okay, we break VWAP. We're below 150 is below VWAP. Great, perfect. We have no overhead resistance. Green flag, perfect, right? Our strength looking okay. So we broke VWAP. You could have took some calls here, like not the worst trade, right? But I ended up working out for you. But the better trade to place is you don't always have to take the trade right off the break of VWAP. You can wait to see if it retests it again. And what I'm kind of seeing as I'm looking at this is it's a sort of a wedge, right? Because we know we have the 150 EMA, which is going to act as support, and that's slowly rising. So I know if at this point we might be a little too overextended, we could test VWAP and it has the 150 EMA to bounce off of. So you could have gotten right here, it worked out for you, but the better time to get in would be right here. But entries are always hard, and that's when I whip out the 9 and 21 EMA. And this is how everything starts to come together, at least for me. So we're thinking of taking calls right up here, right? And okay, we followed the VWAP. Okay, we have a big wick. We didn't break it fully though. As soon as we get this cross and our faster EMA is flips and crosses our slower EMA, you should be taking longs on this candle right here. I wish I could, like, this candle. I can't even fucking. You get the picture. This candle right here. This is where you want to take longs. Okay? We have everything in line. We're above VWAP, EMA is below us, and we've had the cross. Bingo. Bingo. Okay, but okay, the last thing. Now, this might be for another video. It's like, what contract might you choose? Ideally, when we aren't, at this point, we're still not at new high of day, right? And one thing you should keep in mind is high of day can act as resistance. So the safest thing for me to do is take something that's at the money. And right now, like for Apple, like the strikes aren't too great. Like maybe I would take the 230s or the 232s if I thought, if anything, but not anything above, like, now I don't really want to get into contract selection. I feel like that's a whole nother video. But basically, this is where you want to take longs. I'll do analysis on another stock on the short term. I know we already looked at Tesla. What do we like on a bearish perspective? That our EMA is above VWAP. Bingo. Because we don't want to be taking puts if EMA is below VWAP, because it could act as support and we could bounce off from there. What we love to see if we're bears is that EMA is above VWAP, because it could act as resistance like this or like this. Now, when would you enter? Let's see. Okay, let's imagine we're watching this stock as the day goes on. So right off open, we have a dump. Okay, could be a fake move. I'll usually take plays right off the rip because I don't know. For me, I just don't feel like it's safe enough. I want the story to kind of develop. Excuse me. You kind of rally. We're holding. We break VWAP. We're not over 150 EMA, so at this point I'm still bearish. Get a big drop. So like my thoughts, if I was like really like I had to, like I'm a crack addict, I need to place a trade, like I need to take a Tesla trade right now. What I would take is, so at this point we've confirmed we're getting bearish, right? But the price is a little too overextended. Let me show you the MACD a little bit more. So price a little bit too overextended to the downside, and what we are looking for is retracement back to our EMA, and that will act as a good two things. It'll act as resistance and a good level to get in. Well, I don't know why I brought up 3 fingers. Two things: good entry point and acts as resistance, and that's what we're looking for. So entry off of these is great, and you know what, like what your stop loss would be? VWAP. So you could enter off right here, goes down, great, you're in profit. It rips up, it flips a VWAP, and it holds and breaks VWAP. You're not losing that much money, like especially if you're day trading and scalping, you should be sizing light. But you shouldn't be losing too much money if it pushes you out and it flips VWAP all of a sudden. And especially like right here, I would also be a little scared of taking puts just because our MACD is rising. And secondly, we have strength holding while the stock is falling, which is a form of divergence. So if I really wanted to, I would like force a trade in there, but I don't really like it. Honestly, the trade, if I did take, it would be right here. Or at any point, like right here. This is a great opportunity. As soon as we get our 150 EMA below, let's go. You know, we're for sure gonna cook. You know, because then the main resistance is below volume weighted average price. Like this is when I know, like, okay, for sure we're about to start cooking. I would take I'd take a put around. I mean, it's hard to say in retrospect because I'm seeing all the candles, but usually, look, downtrend, wait for to get a better price for retracement back to your EMA. If you got entered right here, it didn't go up and stop you out, you're good, and you printed. You absolutely printed. But you kind of get what I'm trying to say. We could look at this on the 5 minute as well. And basically same story. We break under VWAP. You could have taken this move, not. Right here, when you see we're rejecting again, this is a perfect short. Where you could wait for the next candle too. You could wait for the next candle too to see if we make a lower low. If you aren't taking shorts right here, what are you doing? You know, like the information's all there. AMD, alright. I don't even want to look at this shit. It's so disgusting. It makes me sad. It was a decent day today, but what I don't want to look at is that. But honestly, like the fact that I really thought it was gonna shit the bed worse today and fall to 100, and I really like the fact that it's held. Do I still like the stock? No, shitbag. Let's look. I didn't do a long-term analysis on this, so let's look long-term first before we look short-term. Long-term shit show. This is like the worst chart to, like, why would you be going long here? The only reason to go long would be, and I'm critiquing myself because I am long, and now I'm, in retrospect, still way too risky. So I believe I ended up taking like 130 calls. I forget if it was, I believe it was right here. On this juice up, I took 130 calls because I was like, okay, you know what? We're at a decent level of like, we should have like support here. No. The fact that we're below like every major moving average is like, it's beyond scary. I think we see double digits soon. I'm not exaggerating. And AMD in itself is very cyclic. Like, look at this: expansion, down, expansion. What's stopping you from going even further down? Like, when we expanded here and we started falling, we didn't just hold ground. We went further than we did last time. So that doesn't mean we're gonna magically hold this, or like where we relaxed after our expansion last time. But regardless, I don't like AMD. It's below all moving averages. This is just the simplest way you should look at it. Terrible. If you do want to play long, like, you're gambling right now. I would wait for like it to be above the 55 to consider taking longs. Yeah. Okay. Short term. I forgot. We gotta do short term analysis. Okay. I wouldn't trust this just because we have EMA above us and we had terrible earnings. But after this point, I would maybe be like, okay, broke higher day. Okay, we flipped. I would maybe, and the fact that the video was juicing up as well at this point, I would maybe take longs here. Green MACD, strength is getting higher. It was a good long, like if you did take it. But like, this is why like I usually like taking longs off like EMA levels and like VWAP levels, is because if shit goes south, that usually like it's not the end of the world, because it'll act as support there again. So if you took calls right here and it came down, like at least like if you continue to hold, like you were in at like the safest place possible at an EMA level that could act as support. That's the way I think about it, at least, and it works for me. Amazon. Amazon looks okay. So what have I said? EMA above VWAP bearish. We try to flip. Rejected. Like, if anything, I would take puts off right here or right here. Like these two zones, I'll take puts. And that would probably be stopped at for a break even, and I would be trimming on the way down. Yeah, I mean, it was basically flat today, but if you were to take a trade, that would be the trade to take. And yeah, so if you're looking at it, MACD starting to get red, you know, strength is falling off. It's pretty simple. This video low-key took a little longer than I thought. I had more tickers to look at, but because I went in more depth than I thought I would, and I think I'm gonna have to cut it off here, because I'm also have to edit this video. But let me just summarize. Let's just do like a quick summary of like what we've learned, or what I've at least want to get through to your head. So recap: SMA is holistic view, EMA is more reactive view. SMA better for long term, EMA better for short term. What do I look for? Above the SMA 55, because that's where institutions are in. Below it, the stocks that we've looked at, I've told you my opinions on. Nvidia, it's good that it's held, but like the fact that it's what I'm looking for is something like this. This is this is above every single SMA. This is what I like. We could crack down, but this is like, so this is the reason why I say I would like to play names above the 55, because look at what's happened to a stock when it's above the 55. You buy right here, you're buying in this zone. Let's just remove everything else. You start buying here, accumulating, you're only up. What happens as soon as you break the 55? It's pain. It's pain. So why would you hold anything? Why would you play calls when you're below the 55? And why would you hold anything when you're below the 55? Doesn't make sense. Just play those like great names that are like trailing above the 55, because look at this. Like, this is insane. Let's just look at like a couple other stocks. Tesla. Do I stop playing it now? Maybe. Would I start playing it when we were like right here? We're above the 55, sure. You know, there's expansion. There's expansion time. What do I look at for like support? It's not the 55. For support, 200 and the 100. You could throw in the 152. Like you can mess around. Like make your own setups. Like combine your own indicators. Figure out what works for you. But I'm just trying to show you guys the different tools you could use and how they give you a better picture about how a stock is performing and how you can make smarter decisions when you're better equipped. Alright, thank you guys. This was a long video.